Good afternoon and welcome everyone joining us today. Thank you for taking your time to tune in to this important presentation. I think most of you know, but my name is Blair Marvin and I'm the Vice President of the Augusta Metro Chamber of Commerce. And we are just thrilled to be seeing you all today and using our new platform via Zoom. We are shifting and have shifted to this new movement, Achieving More Together Today, to provide all of our members and the business community at large really information to stay informed, educated, resources to keep businesses moving, and helping everyone still stay connected. So this is our 17th webinar. We do them twice a week, Tuesdays and Thursdays at 3, in conjunction with daily communications via email and social posts, again, to reinforce the important information that is so needed and that we are disseminating to our businesses to keep them informed and engaged. So if you have not checked out some of the other webinars, they're all hosted on our website, so you can hear the recordings of previous presentations. Today's presentation will also be recorded and sent out to all of those who registered, and it will be housed on our website as well for future reference. We are so appreciative to our team at Elliott Davis for taking their time to present this information. We will be having a question section at the conclusion of the presentation. A couple of our businesses have already reached out with their questions, which is great. But if something comes up during the presentation, feel free to use your question button and we will collect those to be answered at the end of the presentation. So again, thanks to Bill Woodward and the team at Elliott Davis. It's my pleasure to introduce Bill to you all and turn it over to introduce his team for the presentation. Thanks again.
Thank you, Blair. We certainly appreciate the opportunity to be here today with the Chamber and its members. Again, thank you. Thanks to Sue. Thanks to Sarah Beth for helping kick this off. We're excited about the opportunity. Again, I'm Bill Woodward, and I am with Elliott Davis, and we're a regional CPA firm with about 800 professionals. We're grateful for this opportunity to share what we believe is our quickly expanding knowledge and experience with the Paycheck Protection Program loans and forgiveness. Across our client base, this is a very hot topic, and I'm sure you're very interested in it as well. Across the Southeast, our firm is quickly mobilized, but I think it's kind of a small army to help our customers navigate this critical compliance process. But the stakes are high, so we want to help our customers and we want to help you today get it right. It's a huge opportunity, particularly the forgiveness piece, and we certainly want to see our customers benefit the most they can from this Paycheck Protection Program, or the PPP as many people call it. It's tricky. The goalposts, they keep moving. Could change tomorrow. Over the weekend, the Treasury Department dropped some new guidance, which we are still digesting and interpreting. And in fact, the experts that we have today, there were updates made in this presentation just a couple of hours ago to try to keep up with the latest knowledge that we have. But again, it could all change tomorrow. So with that said, we're featuring 3 of our firm's experts on PPP matters. Peter Barton, a director out of our Charleston office, serves our customers in a variety of ways and primarily in the consulting and accounting arenas. Hey, Peter, how are you?
Hey, Bill, doing well. Thanks for having me on today.
Good. Glad you're here. And we've got Angela Ford. Angela is a senior manager serving customers here in our Augusta office. Hey, Angela.
Hi, Bill. Glad to be here today.
Thank you. And Jessica Kane, a tax principal. She serves our customers here in our Augusta office as well. Hey, Jessica.
Hey, Bill. Hey, everyone.
Good. So, Peter, I want to talk a little bit about the intent of the federal government in rolling out PPP. It was to help small businesses. It was done very quickly, but in that quickness, there was a lot of detail that wasn't addressed. So There's a lot of risk in that for people that borrow the PPP funds with the intention of it being fully forgiven on the back end. What are your thoughts about that as far as risk of compliance and the associated risk folks need to be thinking about?
That's a great question. I think to start out with, what we know and what the SBA has told us is that loans in excess of $2 million will be heavily scrutinized by the SBA. We know that they are going to be looking at the borrower certifications. There's 2 of them that they ask borrowers to certify that the PPP funds are necessary because of an economic disruption to the business, and then also to maintain operations on a go-forward basis. The second certification that came out addresses whether or not the business has capital or liquidity available to them as alternative sources outside of the loan. And so there's a fairly high hurdle for borrowers in excess of $2 million that they need to document and memorialize their thought process for why they need to accept the funds. For businesses that do not fall in that category, what seems like a very easy way to access PPP funds, I think we can all speculate that the process to apply for forgiveness will be much tougher than the process to receive the PPP proceeds. And so, right now we're advising that the proper record keeping and documentation and accounting procedures are kept in very clean order, so that the borrower can provide a documentation to their banks in order for them to receive full forgiveness. And then additionally, I think it's attending webinars like this, the program, to understand how the funds can be appropriate, so that you have no surprises in the future when it comes time to apply.
Thank you, Peter. I know we've got some calculations that we intend to walk through to show how some of the guidance works. Do you want to walk through some of those now?
I think you can just maybe kick it over to Angela, and she can walk through some of the material, and then we'll work through the calculation toward the end of today's program. So I'll turn it over to Angela.
Great. Thank you, Peter. Thank you, Bill. We wanted to kind of start out with, definitely there are a wide amount of sources of information flooding the internet as far as the PPP loan process, the PPP forgiveness process. And so we wanted to first kind of start off today's presentation directing you to the best sources of information that you can utilize as business owners to try to make sure that you're navigating this program appropriately. So on the slide in front of you, you should be seeing that the Department of Treasury, as of May 18th, this is the guidance that has been released thus far. There have been 12 interim final rules that were released that cover a variety of different types of information as the program has evolved. There have also been a frequently asked questions section that has been published on that website for the Treasury. And there have been 47 answers provided thus far to various questions that have occurred as a result of several different inquiries that have evolved throughout the process, with clarification around certain eligibility expenses, the covered periods, and all of those different sorts of information. You can find answers to some of those questions within that frequently asked questions section of the U.S. Department of Treasury. And then most recently, this week, actually, the PPP Forgiveness Application was released. It's an actual 11-page document that also includes instructions. And as Peter mentioned, it goes into great detail and shows just how confusing the process is going to be on the forgiveness side of this. Even within the instructions, they're still lacking a lot of guidance and clarity surrounding what to put in different forms throughout that application process. So below on this slide, you'll find the links to those various websites where you can access those interim rules. You can research and review that FAQ section. And also there's a link at the bottom that will provide you access to the 11-page forgiveness application form. This form will have to be filled out by the borrower at the end of the 8-week covered period. And then the lender will actually have, I believe it is 60 days to approve that application for forgiveness to determine how much of the borrowed amount will actually be eligible for forgiveness at the conclusion of this program, which ends on June the 30th. So Peter, if you want to advance to the next slide. We did also want to just provide you all with some of the more recent updates or recent guidance issued by the U.S. Treasury. As Peter mentioned kind of in the intro section to the presentation today, there was a lot of talk and concern around the certification process. For every applicant that applied for the PPP funding, there was, as part of the application process, a certification box that all applicants had to check that stated they were, there was economic uncertainty about their business operations as a result of COVID. And through that, if you followed the news programs, you would see that a lot of larger corporations were actually required to return the PPP funding. The guidance that came out after that was that potentially some of these larger corporations might have had access to capital elsewhere due to the fact that they're, exchange on the stock markets and that sort of thing. They could have received funding from other sources. And the intent of the program was really to provide PPP money to those smaller business owners to help them retain and rehire those employees that have been lost as a result of the COVID pandemic. So obviously, as that process and people were watching the news, there was a lot of concern that, how does this apply to smaller business owners? Was there actually, what does it mean? What is the definition of, economic necessity or the economic uncertainty surrounding the current economic environment that we're all in? And so we had quite a few customers very concerned about that checkbox that they selected on that application process, and were really looking to potentially return the PPP money because they weren't very clear and they didn't want to face any further potential liability or civil or criminal penalties as a result if they were not defining it the same way that potentially the SBA or the U.S. Treasury was defining that. So luckily, these issues were addressed through the FAQs. Some clarification and guidance was provided. As Peter also mentioned, the loans that were funded over $2 million, $2 million and above, will be heavily scrutinized. It's also basically to allow for the, putting the audit resources where they need to be. For the SBA, definitely will have limited resources to audit every PPP loan that was funded. But there is some relief that was given to the business owners that potentially received funding in an amount of $2 million or less. They will be deemed to have met the certification process in good faith, which basically means that they realize and understand and really did not want to scare business owners into feeling like they couldn't apply for this funding or utilize it for the intended purposes, because it was put there to help those employers retain and rehire. And they also realize that smaller businesses will not have the access to different sources of cash flow or reserves or any type of liquidity that other larger corporations may have access to. So the good news is there, if you did check that certification box through the application process at the time of loan application, you will be deemed to have met that in good faith. And of course, there will probably still continue to be, even for loans under $2 million, they still may be subjected to audit, but more on like a selection process versus every single one of those. And like Peter mentioned earlier, you still want to maintain good documentation around the impact of COVID to your particular business. you know, whatever that may be, decrease in revenue, you know, effect on your collections process, anything that might be impacting the business operations, you would want to have to substantiate the support for that economic necessity in the event of an audit. So those are two highlighted guidance areas that are addressed in the FAQs. That 31 and 37, 39 and 46 provide additional clarity there. And again, just kind of gave business owners a little bit of relief there that they did make that certification in good faith, and that while they do need to maintain that documentation, because the guidance is unclear as to what that definition will look like, it's allowing a lot of more people to sleep a little bit better at night knowing that they made that in good faith. Also, there was another FAQ number 40 dealing with the restoration of headcount. There was also a lot of concern that as employers started to receive the PPP money and they started to try to rehire employees that maybe were let go as a result of COVID initially when this all started, then they were getting information back from employees that they did not want to return to the workforce because potentially they were making more money on the unemployment system versus going back in and working for that particular employer. And as Peter will get into the calculation process on the forgiveness side, there is a waterfall approach to this. And if you cannot restore your headcount by that June 30th time period, there can be reductions to the dollar amount of forgiveness that you're provided in that process. So this FAQ number 40 states that if you offered an employee their job back and they refused to come back to work for whatever reason, as long as you have that documented in writing that you offered their job back and they refused to come back to the workforce, and they decline that, then you will basically be given a restoration of that head count. So in other words, it will not impact your ability to obtain forgiveness because that particular employee did not return to their job prior. So, but you do need to have that in writing, and in the event of an audit, you will be required to provide that documentation if you claim that restoration on the forgiveness application process. So I'll turn it over to Jessica to go through some of the tax implications of the PPP program.
Thanks, Angela. One of the first things when the PPP program came out was people started asking, since it's forgivable, what's going to be the income tax impact of this loan and potential forgiveness of it? And, one of the great news in that was that it is a tax free. The forgiveness of debt is not subject to income taxes, but that also generated a follow-up question of what about the expenses that I'm paying for this? And there was a lot of uncertainty for the first few weeks until this notice came out, Notice 2020-32, and in it the IRS took a position that under other treatments in the past related to tax-exempt income, the expenses that are incurred using that tax-exempt income are not deductible for tax purposes. And this prevents essentially getting a double tax benefit and not having to pick up revenue, but then being able to deduct the expenses and getting kind of the two reductions in the same amount related to your taxable income there. And then this spreadsheet, go ahead, Peter.
Sorry, Jessica, your audio is just coming in a little jumbled, but it appears that it's better. If it's not, I'll jump in and continue this.
Is it better now?
Yeah.
So what I was saying was when this initially came out, one of the big benefits of the PPP program was the forgiveness component. And the fact that it was stated that this will not be subject to income tax. Generally, cancellation of debt in a lot of instances is subject to income tax, but this one is not. However, subsequently, the IRS has also stated in a notice that they are taking the position that the expenses that are incurred and paid for using these tax-free PPP funds are not deductible. And what it does is prevents a double tax benefit to taxpayers where they don't have to pick up income but then they get to use that money to take the deduction there. And so they've essentially deducted it twice almost by not picking up that income. And we've done some slides here down here in the chart where it basically shows you that even though you're not allowed, Peter, it's saying my audio is.
Yeah,
right there.
I'll pick up where Jessica left off. Thanks for bearing with us with the technical difficulties that we're all broadcasting from home. We wanted to provide a table that showed or illustrated impacts to a borrower in the resulting PPP funds and how it impacted cash flow at the end of the day. And we'd like to just make the distinction in the final column all the way to the right that under the kind of the current framework in which we're operating, with the IRS telling borrowers that these expenses are disallowed, relative to not having a PPP program, the borrower is still in a better after-tax cash flow position than no PPP funds. In our comparison here, it's illustrating that it's about a $50,000 cash flow difference, which is the impact of a higher tax burden because of the expenses are no longer eligible for deduction. If you have any follow-up questions on the tax components, we can certainly discuss your individual facts and circumstances. So as we jump ahead to the actual PPP forgiveness application, it's answered some of the questions that were lingering out there, and I've been monitoring the Q&A during parts of the presentation, and we've had some questions regarding what period the loan covers, and so I hope that I can answer that question here. So the 56-day period begins the day in which the business receives the funding. Now, however, they give borrowers a little bit of leeway in that they can elect to have an alternative covered period for their strictly for their payroll, so you don't need to have a prorated beginning period and a prorated ending period for the payroll. So that alternative covered period is what it's called, and it gives that borrower just the flexibility to match up a 56-day period that coincides with their payroll cycle. However, all of the other expenses are going to be restricted to the 8-week period once the loan has been made. I think other highlights, we'll work through this list fairly quickly. The maximum compensation for any individual is $15,385. Or an owner, it's also $15,385. Or if their 2019 compensation on a prorated basis was less than $100,000, it would be that number. The application has given us clear guidance that mortgage interest, lease, and rent expense on real and personal property is allowed. So this expands the types of non-payroll costs that are eligible. So equipment, any type of interest on equipment financing or on autos, it would be allowable under per the forgiveness application that was released. As we continue, FTEs or full-time equivalents for employee headcount was a source for confusion. The SBA has defined a full-time employee to work 40 hours. The maximum that an employee can be is strictly 1, so overtime does not count in this calculation. And then they've also provided guidance for a simplified approach that if someone works 40 hours, there's simply 1 FTE. If they're less than that, they can be 0.5 FTE. The borrower is still able to calculate their headcount and their FTEs, dividing everybody by 40, but they also provide options for a simplified approach. Similar to what Angela mentioned earlier with voluntary to provide even clearer guidance as it relates to voluntary resignations, retirements, et cetera, that these will not impact headcount, but of course they just need to be documented accordingly. And then lastly, the safe harbor for forgiveness of headcount measures the headcount as of June 30 and compares that to February 15th. We didn't know if this was going to be an average over the period or just a snapshot in time. And so now it looks like it's a snapshot in time. So then lastly, there are some things that we still don't know that the SBA and the Treasury have said that there will be continued guidance. And I've seen some questions come along regarding bonuses or hero pay. We are fairly confident that for employees who earn less than 100,000, that some type of hazard pay or hero pay could be included. But we're fairly certain of that. We're not 100% confident at this point. We're also unclear about non-cash compensation for owners. And when we get to the calculation, we can walk through that segment. But basically, owner retirement, owner healthcare, it appears that the new application does not allow for these types of non-cash compensation to be included or eligible for forgiveness. Lastly, on the utilities, it does appear that there's a wider latitude to include some other costs outside of what I would think of as traditional utilities. But once again, they're not expressly stated. And so just something to continue to monitor. And then finally, what type of information will be needed with the application? The application itself does state certain items will be reviewed, like the 941 that's submitted at the end of June. That payroll records will be requested, that invoices and leases and that type of thing may be requested by the bank, but we anticipate much clearer guidance coming out for the forgiveness application. So I think if we can put everything together in a case, and if we just walk through the facts of the case, and then I'll share the calculator template, and we can work through that. But we have a manufacturer located in Augusta that's experienced a 20% revenue reduction to COVID. There's been a relatively minor disruption to headcount. There were 2 furloughs in March. The company had 22 FTEs at time of application. All the employees were full-time employees. 12 employees earn in excess of $100,000. 10 employees earn less than $100,000 and all had wage reductions of 34%. Rent is $60,000. Utilities are $15,000, and PPP loan proceeds are $400,000. So I will share the screen to go over the application. And so I hope that most of you have had the opportunity to review the PDF forgiveness application. We have effectively turned that PDF application into an Excel calculator, and it has all of the elements that were included in the PDF in the PDF form. And so there's the summary calculation form, and then there's Schedule A, and then we have taken Table 1 and Table 2 and put them on separate Schedule A worksheet tabs. And so as we work through the facts of the case, or if you work through your borrowing application or your forgiveness application, it's best to start at the back, at the Schedule A worksheet. And so there are two tables, one for employees under 100,000 and one for employees over 100,000. And so if you recall, there were 10 employees who earned less than 100,000. So this is their annualized compensation for Q1 of 2020. And then what the calculation does is it compares what they actually earned for the 8-week period of time, which all of these employees earned $8,123. And on an annualized basis, that's $52,800. Their hours were unchanged, so they've been at 40 hours, but they were all reduced by greater than 25%, and so there is a reduction to the amount of forgiveness that they can achieve. And so the calculation works through and provides that each employee, because of their wage reduction, the overall forgiveness will be reduced by around $1,100 per employee. And so ultimately, there are 3 boxes that this information then feeds into Schedule A. If we go through the same worksheet for employees who earned greater than $100,000, it looks very similar. However, you'll notice that there's no box that relates to reductions in compensation for employees greater than $100,000. And so an employee that earned in excess of $100,000 last year, their wages could be reduced by greater than 25%, and there's no risk or no reduction in this amount. Next, we move over to Schedule A, and Schedule A simply brings over many elements from the worksheets. And so box 1 comes over, box 2 comes over, and then box 3 comes over that the business did have wage reductions. And so the wage reduction of 11,000 has come over. Very similar mechanics for the second worksheet for Table 2. It's the same cash compensation has come over and the FTEs. And I'll go back and point out. That if you recall, 2 employees were furloughed, and so their average number of hours was 0 here. And so there's 10 FTEs. And then next, the borrower then includes the amounts that the employer has paid for healthcare, retirement, and state and local taxes, very similar to the borrowing application here. Next is the compensation to owners, and it's simply one box. And so when I made mention that it's still unclear if owners can be included in this non-cash compensation, just based on the presentation of the form, it does not appear that they're requesting owner benefits that are included is non-cash compensation, but strictly the cash compensation. So total payroll costs is the sum of many of these lines, 1, 4, 6, 7, 8, and 9. The next calculation on this form is a reduction to the forgiveness amount if FTEs have gone down. And so in our case, we had 22 at time of application, and now we have 20. And so the amounts eligible for forgiveness will be reduced by about 9%. So lastly that's the resulting answer from Schedule A. We then move to the forgiveness form. And on the forgiveness form, we bring over the total payroll costs, and then we enter rent and utility payments that were provided. And so next, there are adjustments. Next are the reductions to forgiveness based on paying the folks less, the wage restrictions or the wage reductions, and then also the reduction of FTEs. And so we had a reduction of forgiveness by 11,000 for the wages, and so that has reduced the amount that we're eligible for. And then further, line 6 is then multiplied by line 7 to provide us with the potential forgiveness amount of $337,000. So the final conclusion of line 11 simply takes the lower of the three numbers, one being this modified total that we arrived at by going through the case. The second is the PPP loan amount. And then the third is simply the payroll costs divided by 0.75%, which of course is higher than the loan amount. So that's not making sense. And so the smallest of the three numbers is the 337. I know we went through that relatively quickly. There's a lot of pieces, but I just want to highlight how this number changes as we meet the safe harbor. And so if we were to meet the safe harbor, this now turns to 1, and now 371 is being multiplied by 1. And so now our smallest amount is 371. And so that safe harbor is very important for that business in order for them to achieve that maximum forgivable amount. And then also, if we were to not have had the wage reduction and that the wages were restored, now there's no longer a reduction based on the reduction of wages. And so the forgiveness amount turns into $382,000. And then just as a quick alternative, if we simply just remove these expenses to where payroll is $265,000 and rent becomes $100,000, this is not an acceptable way to allocate the PPP proceeds because the non-payroll costs are in excess of 25%. And so if you'll notice the forgiveness amounts, line 10, their line 10 becomes 354,000, which is 265 divided by 0.75. And so even though $380,000 was spent, only 354,000 is eligible for forgiveness. I will stop at this time so we can answer some questions. Someone asked is there an indication that the 8-week spend window will be extended? We've heard some rumblings, but there has been no official guidance on that exact topic. Here's another question. What if you offer an employee their position back, they say yes, because they know if they decline that they lose unemployment, that's correct, but then block their availability for the foreseeable future in the scheduling system? You consider that a refusal to work and pull their unemployment? I think that that one's going to be a little bit tricky, but if they're back on the payroll, they would need to be paid, and whether or not they're performing work is another issue that's outside of the ability for the business to achieve maximum forgiveness. Someone asked if I can clarify incurred and paid. Sure. So we initially thought that forgiveness would be provided for cash expenses, but what it looks like is that if the costs were incurred during the period of time, during the covered period, but the check was physically paid outside of the 8-week period, that the business can deduct those costs that were incurred and then paid at a later date.
I believe there were a couple of questions that came through to Bill prior to the meeting. If Bill, did you want to put those out there for the team to answer?
Blair, Bill is having some technical difficulties on his side as it relates to his audio.
Okay, give me a second and I will pull them up.
Actually have, if this is one of them, what documentation will be needed to provided by the business in support of the loan forgiveness application after the 8-week period has passed? Is that one of the questions you're referring to, Blair? Yeah, so the actual application that was just released this week actually has a good section on page 11, actually, sorry, it's page 10 of that application that covers the documentation requirements for the lender. There are certain documentation that will be required at the time of the application for forgiveness. And also there is some documentation that while you're not required to submit that during that application for forgiveness, you will be required to maintain that documentation in the event of an audit. So page 10 definitely covers that in detail, and you can find that on that application form. But just to give you kind of a generic what you will need, you'll need payroll documentation to substantiate the wages that were paid during that 8-week period. They may also request tax forms such as the quarterly form 941 or state unemployment tax forms that show various wages paid for each individual employee. And as far as other things like your health insurance that you covered for your employees or the retirement contributions, you also may have to provide, payment receipts or canceled checks to substantiate that information as well.
Okay, great. I have the Q&A box up here as well. So apologize if this has been answered, but I'm just going to run through them and you can tell me that it's already been answered if I need to. Is there any indication that the 8-week spin window will be extended?
We've answered.
Got that. Okay. Does the 8-week period begin on the date that funds are received?
It does.
Is it allowable to utilize the PPP funds to pay out a W-2 bonus to employees?
We need a little bit more context here, but if a bonus was paid in 2019, the borrower would have received would have received funds to be able to provide a similar compensation arrangement for 2020. And so the short answer would be yes. You could do that, but the long answer is it depends if this person has made greater than $100,000, and in that case, then likely their bonus would be in excess of the 100,000, and so the business wouldn't have the ability to receive forgiveness on that bonus. So short answer, yes, but the long answer is it depends.
Okay, yes. And sorry, it was along the lines of 8 weeks of a calendar year of the previous year's bonus. I don't know if that changes anything.
I think it's a short answer is yes.
Okay. When you offer an employee their position back, they say yes. Okay, so you've answered that one.
Mm-hmm.
An anonymous attendee has said, did you discuss the clarification of incurred and paid? And you addressed that. Will you be able to share your spreadsheet?
So the spreadsheet was just created yesterday. We're in the process of working the bugs out, and we'll communicate with the attendees if we're able to distribute that. I just don't have the go ahead quite yet because it was put together in fairly short order.
Sure. Did you hear the PPP forgivable amount is reduced by the EIDL advance? Also, I thought per your example, 400,000 versus I thought per your example, 400,000 times 75 should go towards payroll 300,000.
Sure. So the first answer is that if you look at the application for forgiveness, it mentions the EIDL advance, and it doesn't explicitly state that could be that could reduce the borrowing amount for forgiveness. It sort of gives the SBA the door to say, if we deem it appropriate, we could reduce forgiveness. And then to answer the second question, so the question is, I thought per your example, 400,000 times 0.75 should go towards payroll of 300,000. So at one point in time, there was interpretation that 75% had to be spent on payroll. And what we've come to learn is that that's not a hard and fast rule. The hard and fast rule is that no more than 25% of the forgivable amount may be spent on non-payroll. And so it creates a 75% for payroll, 25% for non-payroll, irrespective of the loan amount. And so that's why I wanted to share that alternative calculation. That if you recall, the payroll was 265,000, and then that is divided by 0.75 for about a $350,000 total forgivable amount.
Okay, thank you. If the lender bank arbitrarily reduced your PPP loan amount, even though the calculated requested amount is correct, and the PPP loan amount was reduced 15%, Can the business reapply for a second PPP in the amount of the shortfall?
This is probably a question directly for your lender. Based on the guidance, can only have one PPP loan. I do know that very early in the process, lenders were being very conservative around calculations, and so just because there wasn't a lot of understanding for the program and how forgiveness worked. So maybe this could be a question directly to the lender.
Okay, we have another individual that indicated she apologized if she missed the answer to this, but how quickly after the 8 weeks are they able to provide the forgiveness response?
So the banks have 60 days to process the forgiveness application.
Okay, what versus base wages?
Mm-hmm. So once again, it's somewhat of an it depends. If the employee's compensation from base wages and commissions last year was under $100,000, the borrower should have the funds to maintain that prorated compensation. It would include both the base wage and the commission. I know that kind of is contrary to the individual's employment contract or individual's compensation arrangement, but kind of going back to the spirit and intent of the PPP, it's to maintain headcount and maintain wages.
Okay, and the 990 tax reporting for a nonprofit, is there any consideration that this could be considered UBI?
I would need to talk to some of my tax colleagues. I don't know if Jessica's connectivity is doing any better, but she might be able to touch on this briefly.
Can you hear me?
Mm-hmm.
Yeah, I mean, I think it's possible that it could be considered UBI, but then I think the forgiveness piece would apply there. We need to probably check with Janice to be sure. We can clarify that after this and subsequent follow-up with the attendees.
Did the latest PPP applications already deduct any amount received from EIDL advance? As a result, the PPP amount received already calculated the EIDL reduction.
That's my understanding as well, that PPP applications in round 2 considered amounts received from the EIDL.
Okay, and then the one that came across, since we have a few more minutes, one that came across via email, many companies received the EIDL advance after completing the PPP application. Therefore, they were unable to include the EIDL advance funds received on the application, which would have reduced their PPP disbursement by that amount. Now we have both the EIDL advance and the full PPP funding. Will the EIDL advance automatically be rolled into an EIDL loan or become an unforgivable component of the PPP? What advice do you have for those who received both?
I would need to think on that question a little bit more. It's very particular facts and circumstances. About what turns into what may or may not be forgiven and what's a loan. And so I'd love the opportunity just to follow up on that question.
Sure, and to our participants today, we will be sharing the contact information of our presenters along with the portions of the presentation that we're able to share. And so if there are certain specific circumstances that you're inquiring on, you'll have access to that information as a resource as well.
And I guess maybe if Bill wants to close us out if his connectivity is improved.
And Peter, one thing before Bill does that, I did check with our not-for-profit specialist because I know there's a lot of not-for-profit attendees on here, and the loan forgiveness is not going to be taxable as UBTI.
Great, thank you. I will just point out that the firm has a resource page that we're updating frequently as it relates to any type of information that we feel we need to broadcast widely. So I would encourage you to check to see what type of information has been posted there, and then check back frequently to see other information that's posted as well.
And Blair, Bill said he is still having some technical difficulties, but we do appreciate the opportunity to present today. And, we are happy to answer any follow-up questions for anybody that has them after this.
Thank you so much for taking the time to present this information. We understand that it's ever-changing and definitely difficult for businesses to understand and know the best route of action. So we appreciate your expertise. We hope everyone that is on the presentation today will plan to join us for our Thursday webinar at 3. And as always, they're housed on our website for future reference. We'll send some follow-up materials to you. Thanks so much for joining us today. Have a great day, everybody.